Imagine this. You open your credit card bill and it says, total balance, $5,000, minimum payment, just $25. And you think, that's it? I can easily pay that. But what if I told you that small number is exactly how banks make billions of dollars every year? This is called the minimum payment trap, and it's one of the most powerful ways banks keep you in debt for a very long time. Here's how it works. When you only pay the minimum payment, most of your money doesn't go toward reducing your actual debt. Instead, a large portion goes toward interest. That means your balance barely decreases, even though you're making payments every month. So technically you're paying, but in reality, you're not making real progress. Now think about this on a global scale. Millions of people are doing the exact same thing every single month, paying just the minimum. And when all that interest adds up, banks make around $180 billion every year from credit card interest alone. Yes, $180 billion. And the minimum payment option plays a huge role in that, because it keeps people stuck in a cycle, a debt cycle. Let's break it down even further. Most credit cards charge very high interest rates, sometimes 20%, 25%, or even higher. And this interest is added every single month. This is called compound interest, which means you're not just paying interest on your original balance. You're also paying interest on the interest that was already added. Now imagine you have a $2,000 balance. If you only pay the minimum every month, it could take you years, sometimes even a decade, to fully pay it off. And during that time, you might end up paying hundreds or even thousands of dollars just in interest. That's money that doesn't reduce your debt. It goes straight to the bank. It's like running on a treadmill. You're putting in effort, you're making payments, but you're not really moving forward. Meanwhile, the bank keeps earning money every single month. Now here's something interesting. Banks don't force you to pay the minimum. They simply highlight it. They make it look like the easiest option. And psychologically, most people choose what feels easy in the moment, because paying $25 feels much better than paying $500. But that short-term comfort creates long-term problems, because the longer you stay in debt, the more interest you pay, and the more profit the bank makes. That's why it's called a trap, not because it's hidden, but because it feels harmless. Now the question is, how do you avoid this? The answer is simple, but it requires discipline. Always try to pay more than the minimum, even if it's just a little extra, because the more you pay toward the actual balance, the less interest you'll be charged over time, and the faster you'll get out of debt. If possible, try to pay your full balance every month. That way, you avoid interest completely, and you stay in control of your money. Remember this, minimum payments make your life easier today, but they can cost you thousands tomorrow. So the next time you see that small minimum payment on your bill, don't just think about what you can pay. Think about what you should pay. Because the real goal isn't to survive the debt, it's to eliminate it. Ending. Call to action.